Guys, welcome back to the Independent Investor channel. We're here live on a live stream from Virginia Beach. It's great to have everybody on the line here. Got a heck of a group in here. Had some pre-discussion going on. I always make myself available about a half hour before. Come on and just strike a little dialogue with the group. Going to be pretty low key tonight. I'm going to try to be as interactive as I can. Just kind of touch base with what I think is going on. This stock market is not trustworthy. We're obviously entering into probably the biggest week of earnings. I'm a little bit interested in some of my larger tech positions. Obviously, I probably one of the biggest blunders for me. I'm going to shout out some of the folks that are in the group here in just a second. But one of the biggest blunders for me in 2018, and nobody's harder on me than me. And that's really what I want for you guys, is to always be evaluating what it is that you can do to improve your program. But for me, it was buying big tech at the wrong time. I just got drawn in at the wrong time. I had owned every single one of them before that, had made good money. But honestly, buying all three, Google, Facebook, Amazon, really took a nice chunk out of the portfolio. And I feel like it feels like a touch of euphoria going on right now. If you guys have such short memories for what was going on just a couple months ago, from October to December, everybody and their mother was talking about a recession. Everybody. And there's not one person talking about it now. China arguably is in one. I think there's some economic data to show that perhaps maybe we're slowing. I don't offer this to be a naysayer on the stock market, okay? I do want to highlight some of the wins in the stock market. Obviously, there's been some money made. That's great. I mean, I fell onto $1,500 of profit this week. That's great, okay? That's going to happen in the stock market, and I don't want you guys to be surprised when that type of thing happens. But there's a little bit different approach for me managing the portfolio that I'm managing now, and some of the new investors that may be looking to get involved in the stock market with, let's say, their first $1,000 bucks. It's just going to be a little bit different approach. But for you guys joining the live stream for the first time, I provide this as an opportunity to come on and strike up an open dialogue with community members in the group. Most of the community members that pop in here, and I see John Michael Haas in here. Jared Odell is in the group here. I do have Ernest. I don't mind pointing these guys out. Of course, Brent, he hardly ever misses a live stream. But I think in respect of your guys' time, I want to make sure that we're providing as much value. And I think every Friday, trying to provide that transparency to the group, an opportunity for folks to come in and maybe ask a question. I'm getting questions from folks that are as young as 15 years old in the group. Some of the highlights in the group, I'm taking about two appointments every weekend, just to talking, allowing folks to bounce their ideas off of me. And we are really making a difference. We really are. So for those folks that have reached out to me directly, I know for a fact we've made a difference. And I think for a lot of folks, some folks just wanted validation as to what they were doing or to run a plan by me. There was one in particular that offered a plan to me, and I thought that the plan that was prudent was to stay put. And I put in the Facebook group an example of some of the headwind that this individual ran into when they went into their major brokerage. The brokers of call-out eligibility this week are Wells Fargo, unfortunately, on the management side. And the other one was with, TD Ameritrade, I believe is who that was. But had this account under the control of a managed situation. I did a video quite many months back on how to say goodbye to a broker. And I think that's a lot of people really show a lot of hesitation when They're not happy with a broker, but they want to avoid the confrontation of taking control of their money and being a good steward of their money, and separating your hard-earned money is yours. Okay, just because you entrust someone to enter into a business relationship for a predetermined amount of time or a non-determinate time, that doesn't still mean that you're somehow relinquishing control of your money. Okay, I never ever buy that premise, and nor should you. If you're unhappy with the level of service that you're getting, I highly encourage you guys to be as critical as you can with the services that you're being provided. And it was really interesting, the response that this individual got when all that was wanted to do, I'm trying to protect anonymity here, but all that really was being proposed was to redesignate the account from a managed account to a self-directed account. Now, keep in mind, this portfolio that I reviewed was awesome. It was awesome. We recommended no change. It was fantastic. What they were concerned with is having that business walk out the door. All the professional service had already really been rendered on the account, and they were all long passive positions. They were all dividend stocks, great companies. And the work had been done, right? So the only thing that needed to be done was to redesignate the account. And I think a lot of these major institutions are panicking right now. I've got Brent in the group here who put a post in there that was so true about hedge funds losing. I've seen figures upwards of 20–30% losses last year. Okay, they are failing to beat the market. It's one of the biggest, most politically correct highway robberies that's going on in modern day era, where I think a lot of people, or rich people, that's why I was referring to, I don't mind people being rich, but I don't make excuses for people being naive about tying up their money with big hedge funds just because it's a reputation. This is a money game. That's what it's about. And I don't care if you have $1,000 in your account, or if you've got $100,000, or if you're working with $500,000 or more. The game is still the same. Give yourself the greatest amount of competitive edge that you possibly can. So if it's your first time tuning into the live stream tonight, I tend to try to channel my discussion to somebody who is just starting out in the market. And that can be somebody in their 20s. It can be somebody in their 60s. That's totally fine. The secret is to enter into the stock market by putting you in charge. That's the whole point. It's the whole point of the program. And that's really the niche of the message. I just want to welcome everybody that's come into the group. I saw Lydia pop in here. I just saw the icon pop in here. So I want to welcome her, obviously, from the great state of California. I do have Brent in the group here, who's also another channel creator. Again, you guys know that I always want to point out those folks. But I really want to emphasize how happy I've been conversing with some of the folks one-on-one with the group. I don't think I'm outside of my swim lane to do so. In most cases, it's really not about money. Quite frankly, I work on basically a tip basis. I mean, quite frankly, and it's not really about that. I think every individual has their own personal needs, and I can't really get down to the nitty gritty on a live stream. But what I can do is kind of drop some of those subtle hints a little bit along the way, so you can kind of look at your own program and say, what is it that I can evaluate? You know, I mean, everybody's got such a different program. And Doug is in the group as well. And I'd like to give a shout out to Doug as well, who's talking about just one of infinite amount of ways to make money in the stock market. And it's exciting, man. It's awesome. The one thing that we have in common after this week, he's saying, hey, it's been a very green market. It's true. We've both made money in the market. And I think probably a lot of people, if you're participating or have participated in the stock market, at least in 2019, have actually experienced what it means for the stock market to go up. Now, I do want to caution everybody. This is the type of time when you want to swim against the current, okay? Don't get crazy. This is not the time that you want to be throwing large chunks of capital at this stock market. You just be diplomatic about your process. If we were in a recessed bear market and we had been there for the last, couple months, I would be having a different tone. But I'm going to tell you guys, I'm taking a defensive posture. I'm putting some cash to the side. I don't want to be so heavily levered to the stock market right here with my portfolio. 300 grand, that's what we're working with. My passive remains passive. My index funds remains passive no matter what. I do not break rules for that. My long stock positions, my cornerstones inside of the Roths, those typically do not fluctuate very much. But I'm taking my opportunity to push some cash to the side right now because, to be quite honest with you guys, my feeling is I don't trust it. All right. Now, I could be completely wrong. Okay. You're wrong all the time in the stock market, unless you're Doug Whitaker. All right. Unless you're Doug Whitaker, you're always right. But, this is my feeling. It's my feeling. It's just amazing to me how just a couple weeks ago, everybody was coming on to the channel. I had community folks just kind of ripping me apart for being a long investor. And it's like, okay, I hear you out, but I'm not going to move during volatility. I'm not. I'm going to move in the stock market when it's convenient for me to do so. And that's it. And that's fine. But I don't hear one single whisper at all of concern in this particular stock market. So what I'm going to do, I'm going to cruise up here. We do have just a killer group in here, man. I really, really cool. It's cool to see Investing Wisely in the group here as well. Another channel creator. Again, if these guys pop in here, I'm going to call them out, certainly. If it helps spread the word of the community, the only real reason why I think most of the people here who are represented, even the channel creators, have around 10,000 subscribers. Lydia's probably going to be there probably next week. So, some smaller channels, which is actually kind of cool. There's more transparency, I think, on some of the smaller stuff, some of the smaller offerings. So it's kind of cool to have those folks in the group. And if you just want to talk to them directly, you can. But I'm going to cruise up here and see if I can't extract some of these questions from you guys. Again, we've been really helping a lot of folks. It was really nice for me to have kind of a reality check on the channel, kind of come back to the roots as to why I did it. It's never been about the money, certainly. So to kind of come back to the roots and really, really hit home what I feel, you guys, if you caught the fiduciary video, I meant every word. And it just makes you look at the things that come through the mainstream media with a different lens. Can you be a fiduciary when there's a 1.5% basis point management fee affixed to that assets under management? Can you actually have that relationship? I contend that there's questions to be asked. Could you have it in a perfect world? Sure you could. But for the unknowing investor who just sees that come up and say, wow, I've got 750,000. I'm a candidate to walk in that door. There's nothing really special about it other than the sales pitch. And they've been very, very good at doing that. So again, I want to welcome Ernest into the group here. I've got Brenny who hits me up with a good question. Hey, Ryan, is it normal to pay or for dividend stocks to not pay you or not pay on time? What do you do in those cases? It's not normal. On the Morningstar report, I don't know what brokers, you guys need to get familiar with the reports function. I do read the Morningstar reports for stock. I think it's very interesting. They'll do all the valuation calculations and kind of let you know whether or not they think it's undervalued, fairly weighted, or overvalued. But the only time that's happened for me is with China Mobile. China Mobile crept up. I was up $50. You guys know I took that into a severe downturn. I went up $50 in it, and I went to the side on that. There was a reason why I did that. I was very heavy in telecommunications, so I removed my holding from China Mobile. But China Mobile was one of those that I was due the dividend, and they didn't pay. They didn't pay until 5 weeks later. And that just spoke to, on that Morningstar report that I referred to, that you guys all have access to within your brokerage accounts. They have very poor stewardship of their dividend. And that's kind of what it comes down to. Not only do they not quite pay enough, comparatively speaking, I think Verizon pays like 75% of the revenue that they get, whereas China Mobile could pay 75, but they pay like 40. So typically I don't run into that very often. That's typically why we have the luxury of investing a lot in the U.S. I don't know some of the other established markets around Europe, Canada, etc. I'm quite certain that they don't run into that because there's so much regulatory scrutiny on that. I'd be hard pressed to say that that's very normal in the industry. But he did ask another question about taxation within the Roth. All you guys will really need to do is declare your contributions to your Roths. Now, obviously, they're not going to be tax deduct. They're not going to come off of your earned income. Okay, they're not going to be deductible. They're non-deductible contributions, but you just claim those in your tax software, whatever it is that you're using, and that's how that works. Now, traditional contributions obviously do reduce your taxable income, which is nice for you higher income earners. That does help. Okay, but you want to align the tax software with your 1099 divs and interest within your brokerage houses, and those should come available. They typically don't come available until a little bit later, until at least February 1st. I think it's actually a little bit later for me as well. So I typically be patient. I don't jump on there and try to do my taxes right away. I know if some of you guys are really looking to get on it, you can start it. But don't submit that unless you have all of those tax forms attached to that. And especially if it's your first time going through like a platform like TurboTax, for example, you can go through that and you can set all that up. It's going to be kind of a pain in the rear to do it the first time, but once you get it all set up, you'll be good to go for future years if most of the prudent information remains the same. Some interesting topics, honestly, in the market. I'm very confused on this stock market. I couldn't tell you. I don't believe this is a time to go full-fledged into the market. Again, talking to two different classes of investors, certainly. If you're a young person, you're investing and getting started in the stock market, you've got the full green light. Okay, you really do. All right, I don't want to misconstrue my insights in the stock market of what's going on. It's just that I do have an obligation to do some wealth, some preservation, some conservation at this point, to be honest with you, because I have some reservations about what's going on right now, mainly around the world. Obviously, with the political situation going on, I don't know how much is going to happen on Capitol Hill over the next 2 years. I really don't know. I certainly don't want to turn this into a political discussion. But I'm cautious. I'm cautiously optimistic. I'm still obviously very heavily weighted, but I've pushed my cash. I've pushed my cash balance up significantly to where I've got probably around 33% of my money in cash right now, and that's where I'm at. Okay, so you guys, I would just highly encourage you stay proactive. Okay, don't get complacent on this market, because I think it could turn on a dime. And it's going to be really, really interesting next week's live stream after all of these earnings come through. I don't know what's going to happen. I really don't. The chart doesn't look good for Amazon. So I may have to take that into a deep dive. I really don't know. Facebook could surprise to the upside. I really don't know. Google is probably my prized possession out of the FANG names for sure. I'm not worried one bit about Apple, but that's just me. They've gone through this before. But we'll kind of see what happens as we monitor. There's going to be a lot of action next week. So, I would just caution everyone to take a relative perspective on this market. Don't get crazy. All right. There's no reason to just jump in full force. I was hit with a question this week across the community, and it was talking about every time I invest in a stock, I invest in the stock with the best of intentions, whether it be a stock or an ETF or an index fund or a mutual fund. I always end up either selling it too early, or I have the best intention to hold it long term, and I buy it and I own it for 2.5 weeks, and then I sell it really quick. And he said, I'm my worst enemy. What's some of the things that I can do to help myself protect my investments from myself? And I thought the obvious thing was to really reevaluate the risk tolerance. Okay. I think there's a lot of different strategic ways that you can avoid doing that, because I'm guilty of that as well. What justifies it for me is that I have a passive bucket that I don't ever touch, ever. It's the 70-20-10 mix, 70% S&P 500. It's 20% small capitalization and 10% international exposure. I have no fixed equity in that bucket. That's what it is. It stays the same. I abide by a very strict dollar cost average rule. 10% of my pay goes in there, and I don't look at it. I look at the statements every quarter, and I look at the statements every year. But that's kind of what justifies me taking certain passive positions within the Roth, right? But it also allows me a little bit of latitude to say, if I want to take some profit off the table, I don't beat myself up over it, okay? And it's like, well, I end up selling the stock early, and then I watch it run up, another 10 bips, right? Don't beat yourself up over that. You're going to take profit. You're going to sell early. You're going to take a stock into a downturn. You may have bought it at the wrong time, but really kind of told me a lot about reassessing the risk tolerance. If you're going to do that to yourself, scale back a little bit on the amount of exposure that goes into the stock market. If you're putting too big a chunks into single stock, or you're putting $1,000 at a time when that's all you have into the index or an ETF, you might want to think about just scaling into it. Take $200. I talk about this all the time. It's the 20% rule. And I don't like to assign rules, but the exercise gets you to think about the what if. What if I subject this money to risk? How am I going to react if it ends up taking a haircut 20%? And that's a good exercise to run yourself through before you subject that money to risk. And that'll help you keep long on your program. You have to figure that out. You have to keep a good chunk of your money passive and long and working for you. You got to get over that solution for yourself, in that you can't always just enter a stock and then just look for every single excuse to get out of that stock. You can't do that. Remember how I talked about deploying a strategy that's unlike a human strategy, right? A lot of people that I talk about are really detail oriented, all right? They really want to know the answer to everything from a day-to-day perspective. They're really successful at work. They go to work and they're very detail oriented. They're very hands-on. They're very good with people. None of that stuff matters in the stock market. None of it. You have to work really, really hard up front to get it right, and then leave it alone. All right. So you got to be kind of careful with really fighting what it is your worst enemy, and that's always you. And that's where I always talk about you being your worst enemy, or the hardest and easiest thing to do in the market is just to put your money to work and leave it alone. It's the hardest. It should be the easiest thing to do. It's really, really interesting. And we'll continue to struggle as a community with that very dynamic. That's just what the stock market does, because it's hard to sit there and watch your money go up. And it's like, I just want to take this profit off the table. And there's a time for that. There really is. And what can really make that easier is to enter the stock market the way I suggest that you do, passively to start, and give yourself a chance to get your tolerance built up and evolve, and then earmark a small piece of your portfolio to enter into a little bit more of a tradable position if that's what you want. If you seek out an opportunity, if you look at a JD.com right here and you say, okay, I want to take this, or you look at a Kronos, okay? You look at some of these MJ names, right? It's hard to sit there and watch names that have just skyrocketed 60%, you know? We might be in one of the most exciting times to get involved at the ground floor in the MJ community. It may very well be that time, but you're not going to know until 5 years down the line and you reflect back on it and say, did I have the fortitude to make the call, you know, while nobody else had the fortitude to make the call at that time? That's the dilemma of the stock market. It really is. Let me try to cruise down here. Let's see here. I've got John Michael Haas. Hey, trying to figure out how to allocate my Roth IRA this year. Do I do ETFs or dividend stocks? Certainly, that's the million-dollar question, and it's a really, really good one. There are allocation tools on your platform that I'd highly suggest that you use, and I don't want to put you on a wild goose chase. That's not why you come into a live stream, to have a one-on-one with me. But I would encourage a couple answers to some questions. If you're in a position where you've got X amount of capital built up in the market and you've already got that Roth funded, I'm just going to assume for just a second that you've max funded that Roth, okay? I would consider being very, very careful with taking the entire $6,000 and dumping it on the stock market. I really would. With that said, depending on your age and your risk tolerance to the market, and no matter what, over the next few years, I don't care what you assess as your risk tolerance, it will be tested, okay? It will. So I want you to imagine for a second that you take that $6,000 for 2019. This is your first investment. You've gone from $0 to $6,000 of your hard-earned money in that Roth IRA. And I want you to imagine us going into a recession into 2019 or 2020, and whether or not you're going to be as happy now as you will be during the recession. Okay, are you going to be able to put yourself in a position to add more to that? All right. Now, I'm not asking you to invest with fear. All right. I'm asking you to invest with some level of respect for the market, and I think that's really what a lot of people do not have the proper respect for how difficult it is to make money without a plan. Okay, so a couple of options that we push through on the channel. Obviously, we talk about the Vanguard ETFs. Honestly, there's iShares out there. The reason why we roll out the Vanguard option is not to muddy the water. Okay, it's to provide a very, very clean platform, lowest cost ETF option, but there are many. Okay, some brokers don't offer Vanguard ETFs. Some will offer their proprietary Charles Schwab, Fidelity, TD, Ameritrade. So it can also come down to availability of those products. So you've got to be kind of careful. But I want you to kind of ask yourself, if you're a beginning investor, I honestly think a 10-share block in the S&P 500 is a very, very prudent place to start. All right. You're buying and manufacturing that diversification right up front, number one. Number two, you're allowing yourself the opportunity to start the dividend reinvestment program. Now, I'm assuming that you took all of this money and put it in there all at the same time. Okay. And if you're using a broker that allows you entry into these fine ETFs that you're asking me about, that helps. Because those larger blocks of purchase help you kind of save a little bit on the entry fee, which is going to be around $7 depending on what broker you choose. All right. If you go with one of the three options, Webull has been brought up here, but I did not know that they do not offer a retirement account. Very, very important. The first trade option does, and of course M1 also does. So those are kind of the community favorites. But guys, if you're going to get me to put Webull in the same category as a first trade or an M1, you're stretching a little bit, because I cannot endorse that somebody get involved with a Webull in a taxable account unless it fits for them, unless they already have a Roth like you do, John. I could also consider, if you were max funding, if you were in the S&P 500, right, which is a pretty good chunk of the U.S. large cap stock market, to consider supplementing the VOO with the VB, which is the small cap index or ETF. And you don't have to match it 50-50. Have the bulk of your money devoted to the large cap growth and value that the S&P delivers, and then consider, a smaller position. My playbook, I'm going to give it to you right now, is 70-20-10. So you could do a 70-30 mix and just do the S&P 500 and the VB and be off to a stellar start. And I know it may not be the answer that you want to hear. Certainly, we could have a more in-depth discussion about adding some single stock, and especially if you max funded that, because we're in such an interesting market now. When you look at a company like Pfizer right now at 40, or an AT&T at 30, or a Comcast right now, there's some stellar values right now in the single stock or the stock pickers market. But I certainly don't want to see you go out there and get tethered to 5 or 6 single stocks right off the bat, because that's going to really test your risk tolerance. And I'm telling you what, you need to be very cautious in entering the stock market. And I think a 10-share block at a $2,500 installment in the VOO is a prudent move for a maximum funded Roth IRA right here. And if you wanted to add another $1,500 to the small cap and leave $1,000 aside, whatever it works out to be, you could do that, or have $2,000 on the side. Maybe even if you wanted to say, you know what, Ryan, I am interested in doing the VB and the VOO, but I do also want to add a little exposure in my first single stock. Depending on what that stock is, I would say absolutely. I think that's a great idea. Best of breed, right? A Pfizer is another good one. Something like that, a real cornerstone that you're not going to regret that decision next year when you re-up that account and you're looking to build upon the decisions that you've put into play this year, right? So the decisions next year could be not, do I want to add the VOO or an S&P 500? The decision next year is going to be, am I in a position to add to my existing baseline, okay? So always think about putting yourself in a position to build upon the decisions that you've made the prior year. Very important. You don't want to be backtracking and second guessing the decisions that you've entered into. And buying a Pfizer here at 40, there's no reason to second guess that decision. Okay? Very good question, John. Thanks for coming in the group. I apologize to the rest of everybody, but that's kind of some of the thought processes and deliberation that you have to go through when you're looking to portfolio build. The ironic part about it is everybody is so afraid of that very thing. That's the funnest freaking part. That investing is freaking fun. Look at how much fun I'm having, right? So the philosophical stuff is the stuff that I beat a drum on all the time, because I can talk until I'm blue in the face, and John can sit there and say, yep, I agree with you, Ryan. That's an awesome plan. It makes total sense. You'll turn the live stream off and you'll actually deploy this plan, and you'll be like, wow, this feels different than what Ryan was talking about. Maybe I'm a little bit too heavily tethered to the market. Maybe I should have just, urged myself into it, or, it's just a little bit different. The lessons that are going to come in the stock market are going to come after you invest. There's no amount of preparation that you can make, and I do encourage everybody to do that. But once you're invested, man, it's it. It's like going from T-ball to the major leagues all in one step with the press of a buy button, and you're invested. And I'll be the first to congratulate you, okay? But I'm just not one of those guys, and I don't even like the term YouTuber. I hate that term. I'm not a YouTuber, okay? So please don't refer to me as one. You can call me Ryan. That helped, because that's my name. But I just don't think enough real acknowledgement through experience is discussed when talking about the stock market, because now the last 3 months are being referred to as a blip. It was hardly a blip, all right? We have been in a 10-year bull market. Okay. And I think at this point, the media may have their way in just talking ourselves into a recession. When we start to put a little bit more attention on the debt ceiling, which is later on this year, that is going to be the very thing. That's the number one worry that I have about the stock market right now. I hate to say worry, but it's just an obvious truth. Okay. It's one of those things that I will not ignore. I acknowledge. Whether or not I over acknowledge it is up for debate or discussion. That's fine. This is why we have these community discussions, to throw out those different things. So if somebody hears what I'm saying and it's like, you know what, I heard what Ryan's saying, man, maybe I should be a little bit more pessimistic on my investments, because at the end of the day, it's mine. You know, I mean, thank you, Ryan, for pointing that out and asking a rhetorical question to say, am I prepared in all manners of my investment to really be scrutinizing where we are right now? Is the China situation acceptable? Is the political situation acceptable? Is the level of our national security acceptable right now? That's for y'all to answer on your own. Okay, I have my own answers to those questions. But it's worth having those discussions, and this is what justifies having a weekly discussion on the stock market. I know there's people that just want to throw daily uploads on there and talk about nothing, but there's an infinite amount of things to talk about in the stock market that are actually important and will really, really benefit new investors. And that's really a core question, John. Thanks for coming into the group here. Good stuff. Larry, awesome to see you. Great to have you in here. Bob Wright. Bob says he opened Robinhood. That's been one of those platforms that I've heard mixed reviews on, so I'm not going to speak out of turn. I will say this: if they failed to offer a retirement account to new investors, that there are better options out there. And I know Robinhood was really, really a disruptive app. It was one of the top 100 disruptive companies when it first came out, and rightfully so. They were really the first ones to introduce this idea of free trading, and all you needed to do was download an app. But I think it really got a lot of people caught up, and unfortunately it got people into trouble. And you're not, thank you very much for that. I really appreciate that. Very cool, while I await my paycheck. So that's all I'm going to say about that. I got to be kind of careful with what I say, but I'm satisfied that the government is open today. So that's a little joke for the group there. That's a little bit of a joke from the guy who's really not that funny at all. So, but yeah, you know, that's why we offer those solutions, those platforms that seemingly, I don't think you could come into the community and not find an option that's going to work for you. I just have had way too much positive feedback on M1, way too much to ignore it. So if folks are really, really diving into that platform and they're really, really finding that it's a usable solution for them, I'd really like to understand a little bit more whether or not it's usable for both a passive and an active investor, or a passive with stock and ETF, or a passive with basically an ETF, or I've had this as well to take advantage of the passive aspect, but also the partial shares. You have to be able to buy those stock in there a little bit longer, because I don't believe it's the platform that you need to be trading in and out of stock on. I really don't. And so for you guys that are actually actively using M1, I'd certainly love to hear you revalidate that fact for me. But yeah, no, I agree. Again, you guys don't need to marry your brokers, okay? It's your freaking money. It's yours, okay? If there's any gift that I ever give you throughout the history of the previous 2 years on the Independent Investor channel, and the next 20 or 30 years that I do this channel, it's the power empowerment, man. That's what I mean. It's about recognizing that it's your money. It's not mine. It's not anybody else's other than yours. You work too freaking hard for it to just give it away, right? So make those decisions based on what's going to give you the biggest bang for your buck, all right? The biggest level of entry, the biggest level of satisfaction on the aesthetics. And I know I've spoken with some larger account holders that just prefer to have the customer service of some of the larger brokers. I know that's what I enjoy through Merrill Edge. I really enjoy it. I really do. Their customer service I found to be very, very good. TD, Fidelity, some of the larger, Charles Schwab, etc. Some of those larger brokers, some of the larger account holders in the group. And there is a lot of astute community members that are holding some really, really interesting portfolios, and you'd never know. You'd never know, okay? The stuff that we aspire to in society, the folks that are driving around Mercedes-Benz, I don't envy those folks, okay? I really don't, because the majority of them are leasing, okay? So the millionaires that are in this country, man, you'd probably never, ever be able to spot them out of a crowd, all right? Never. I sure don't fit the model, and I'll be there. I guarantee it. I guarantee I'll be there, and I think a lot of you guys will too. You know, and if nothing else, creating some wealth for yourself in the correct manner means so much more than to give away the farm over your lifetime, man. If there's nothing else, you know, I was 30, 33, 34 years old when I came to self-directed investing. And liberating. It's a liberating experience for me, and I think a lot of you guys have really, really justified it for yourself, and that's extremely exciting, man. It really is. So, guys, thank you so much for joining in and helping me facilitate the discussion. Financial investors in the group here, man. I can't thank Brent enough, man. I just wish him all the success in the world and what he's doing for sure. I'd like to meet him someday when I go back home. That's my home as well. So he's answering some questions for some folks in the group here. I've got Sam Ike here, saw Kronos in my simulated portfolio I have going on the side, and saw it has been up a good couple dollars since the beginning of the month. Geez, what do I say? I think it's very exciting. I think it's very, very exciting. For you guys that are young, the sky's the limit, baby. It really is. I think the landscape is about as open for you guys as it can possibly be. All right, don't get crazy. Don't get crazy. Have a little bit of your portfolio that's some fun money. If you want to take a $50 position in that stock, a $100 position, we're giving you guys options to enter into some of these stock picks free of charge. Okay, you don't have to get crazy and buy a 10-share block anymore. Okay, we're providing solutions enough to where you can enter and get some exposure to some of these names. And if it makes sense to you, which that's one of the top ones, the other one has also done very, very well. The two hot ones right now. You guys can help me out if you want. I'm not going to invest in them. I'm looking at them. Okay, I'm not going to say that I'm not going to invest in them, but I'm looking at them just like I look at a lot of things. But at my age, honestly, I'd be more apt to buy a Home Depot than I would a Kronos. Okay, so you guys have at it, tear it up. My job is to show you the way. Your guys' job is to make the decisions. It's that simple, and have fun with it too. That's part of the criteria. Investing is just a killer hobby. It's just killer. I love it. I think Doug Whitaker would agree with me, man, straight up. It's just a fun hobby. Hard to really imagine my life without investing. I just enjoy it that much. I enjoy researching stock. There was a website that was dropped into the live stream last week that came up in discussion, and I'm not sure if it was Brent that offered it or K9 or one of the folks in the group, but it was a funny name, and I don't remember it because I'm old. But I've been using that pretty extensively for the PEG ratios, and it was really, really a good website. So some of those resources, man, that get thrown into this group, geez Louise, if you just had a few minutes every week to come in and pop in, say hello, catch it later, I really think you're gaining so much value, and value that gets your attention in the right direction. You know, you can want to invest, you can want to have success in the stock market, only to be placed on a road that's going to mislead you, and all of that excitement is going to go away because you've been put on a raw road. You know, you've been put on a very, very tough road And that's really, really unfortunate. And I tell you what, that's a lot of why my delivery to folks is deliberate and it's careful. I try to be as careful as I can, because the last thing that I want to see is somebody who would be an eligible candidate. And what does that mean? What does it mean to be an eligible candidate in the stock market? You know, do you have to have money to make money? Do you have to have money to be a successful investor? I contend no. I've got guys in the community that are doing some incredible things with their portfolio, and they account for every single dime that they have. And that's why they're successful. I'm going to tell you the secret. They're freaking hungry. That's why. They're freaking hungry. And that's something that I can't teach. All right. I can get you fired up about investing because I'm fired up about it. It's my favorite topic to come on and talk about, etc. Right. I do this stuff when I'm not talking to you guys about it. I spend a lot of my time researching. I enjoy it. But what it really kind of comes down to is a desire to want to do it. Okay. Really does. And it's not as hard as everybody thinks that it is, man. It's really not. The people that you could envision succeeding in the stock market do not meet any type of stereotype that you have about successful, Wall Street suit and tie guys. That's the ironic thing about my thumbnail for the live streams. I put a suit and tie on it to be funny, because I'm doing this live stream with no socks on, and that's the way I roll, because we can create way, way more value in an hour and a half live discussion than 1,000 suits will ever provide. I've said that before. It's just my favorite line. I just love it, man. The times are changing, man. There's a facade about the industry that I'd like to break through. There's inundation through the news media and through the media outlets, trying to, I think it's very patronizing, actually, making individuals think that they cannot succeed in the market, and that just couldn't be further from the truth. And that's quite frankly what we're looking to pursue, is the truth. The truth being, what does it mean for a random individual that comes into the channel, finds their way in, stumbles in for whatever reason, is interested in the stock market, but doesn't know where to start? Okay. Most people in that situation, that vulnerable situation, is going to seek out representation. Wrong. It's just not what you want to do. The scariest thing for somebody that's as vulnerable as a person in that scenario, the scariest thing for them is to envision themselves investing in the stock market themselves. And that's the best thing that you could ever do. And therein lies the impasse and the challenge of the message, to be honest with you, because I can't do it myself. I can't, I can motivate the 11,000 people that come in and maybe consume the content from time to time. But what I really need is for people to really start consuming this idea and succeeding doing it. Because if we can't duplicate or scale the message out, then what are we doing? Okay, I don't come on here every Friday just to do a talk group. I don't. I do this for a very, very specific reason. And I really want people to take the information, deploy it, and succeed by doing it. And that's really the key. And if we can really win the battle, we can take that message and pay it forward to others as well, to say, hey, listen, man, this guy's talking on YouTube about some interesting stuff. Let me tell you a little bit about it. What he talks about is not giving your money away to somebody to have them manage it for a fee. What he's talking about is me actually taking control of my own money and benefit in doing so. How much can I save over time? Wow, you've got my attention. I've always been suspect of the people who take people's money and invest it for them. I didn't even know there was another way, right? And that's the topic of discussion that we want to foster and further that dialogue with people. So Treva kept me an email right before, man. I hope that helps. That's a good question, man. It sounds like you're making some killer strides. It's really cool to me. I'm responding to Stuart right now, Travis Stewart, I've got a few folks that come into the group, and I think I don't know if they've been with the channel since the beginning, But I don't think so. I think they've just kind of recently come into the channel. But some folks are making their way into the channel and they're like, dude, I get it. This is straight legit. And it is, man. For anybody who comes on and is like, okay, I got it, Ryan. And I've had a few people leave the channel because they're like, Ryan, thanks a lot, man. You're legit. That's great. I'm going to take it and roll. I'm not into the live streams and I'm not into your boring videos. So I'm out. Thank you. You're the man. I'll thank you someday. That's awesome too. I don't care. I don't care. I don't take that type of stuff personally. Okay. The only thing I've ever taken personally over the life of the channel is the Betterment debacle. Okay. And please understand, my intentions were very, very well intentioned. They really were. It had nothing to do with lining my pockets with money. Nothing whatsoever. Nothing. But we've done away with that option. Somebody hit me up in the group here and said, where's the Betterment video? And I jerked it. It's gone. So that's all I have to say about that. All right. You provide a fantastic channel, Ryan. Well, thank you, Andrew. That means a lot, man. My understanding is that Australia was one of the top 5 places to live in the world. And I wasn't surprised at all. So can you validate that for me? We had Norway, Sweden, Canada. There was one more that caught my attention. Japan. Those were the top 5. And Australia. Kind of a cool report this week if you guys want to catch it. Really interesting. And it's always the Norwegian. They're always at the top, man. I think the U.S. was maybe number 8, something like that. I certainly don't think it's. We have our problems. We also have our successes as well. Nobody can control where you're born. You know what I'm saying? I sometimes question why the heck I'm even here. You know, but kind of a cool thing, man. So, but thank you for the vote of confidence. I really appreciate it. I've got John hit me up with another question, man. That's the benefit. So you're taking advantage of the transparency, man. I really appreciate that. I'm thinking more along the lines of income in the Roth IRA with dividend growth investing and then investing more broadly in the taxable in ETFs is what you meant there. I would highly, it depends on how much capital you're working with, John. I don't want to patronize you. If you're starting with 1,000, great. If you're starting with 6,000 and you're pulling in 100 grand a year, I also don't want to patronize you in that respect either. But those decisions will come. Okay, they really will. And again, if you want to be that type of investor, don't let somebody like me sway you one way or the other. Make no mistake, the solutions. Okay, when I talk about product, let me be very clear. When I talk buckets, I'm talking accounts. When I'm talking solutions or products, I'm talking equity or bonds or a mixture of both. Okay, stock, ETF, whatever it is, dividend, value, small cap, that's all in the equity camp, all of it. Okay, so man, if that's the type of investor you want to be, you don't need me to tell you. I can say absolutely it makes sense for you. I just named a couple. I'd look at Pfizer. The valuations there, that's a good pickup right now, you know. And I think for stock picking right now, there's some pretty interesting stuff going on. I just wish I wasn't so heavily levered. I really kind of broke one of my own rules about buying the FANGs all at the same time. Apple I don't consider, neither do I consider Netflix. And it's kind of funny because I think I'm kind of sissified on Netflix because it's the only one that seemingly goes up $15 a day. It just seems that way because I don't own it, right? But you know, I watched Amazon go up for years and years, and I'd buy it and I'd make a good chunk of money, and then I'd sell it, you know, and then I bought 5 shares of it just right at October, and it got crushed. I dropped $2 grand, I think, in the name, and I think I'm down like 600 right now, so it's come back immensely. But I do have my concerns about Amazon specifically going into this earnings. This was supposed to be one of the biggest Christmas seasons. That's why I'm holding the stock. And I don't know. I'm 50-50 straight up. It's fine. I got better odds than going to Vegas. That's for sure. I'll take my chances on Amazon. All right. They're not a small company. I've got Joseph in the line, and make a shout out to you, Joseph. I hope you don't mind. I enjoyed the hell out of talking to you. Very, very good man. I meet so many cool people through the channel. It's just a lot of fun. But certainly a direct call out to you, man. I just wish you all the best, and certainly put some solutions there for you. You know, some buckets as well as some product there to look at, and you know, getting your exposure the way that you deem necessary there for you. That's very cool. Lydia's, she bought Starbucks. That's smart. You were feeling risky. You might have heard it from your friend at the Independent Investor channel last Friday. Maybe. I don't know. Starbucks, I mean, you made out fine. It was a good quarter, obviously. It's in a weird place. Starbucks is weird with its valuation. You know, it is growing 25 times. A lot of people say it's a little bit expensive here. I just sold it. So, that was just me. I think Starbucks is fine. I think it's going to make its all-time high at $70. I think it's going to break. So I think you're fine with Starbucks, especially long. Good grief, what a great company, and a dividend to boot. You're just paying up for it a little bit. I do think it's a touch expensive, but who am I? I mean, you're young. Good grief, build your portfolio. You've already got a killer portfolio. Starbucks just adds to it. So I think that was a smart move. I don't know. Risky to me is going and gambling in Vegas. You know, buying Starbucks. That's a legit investing move as far as I'm concerned, and it worked out well for you. I mean, look at that. You know, I think you're good with it. Scroll down here and make sure that I'll probably have 100 questions pop in here. Yep, there they are. Great. Now I got to scroll back up here. Oh, YouTube. So I guess this is the time when I always do the math on the 77 people in here consuming all kinds of free information. I think, and the thumbs up is like at 29. I will just add this. So it doesn't cost you anything to hit the thumbs up button, right? I don't have any affiliate program with the thumbs up button there. Thank you. All right, great. One person heard me out. No, I'm just kidding. I think it's a wonderful thing, man, that there's people that tune into the message from all over the world. And if they take a little bit of empowerment or a little bit of support on the investing, I take every advantage I could get in the stock market. It's very important. It's just not as easy as turning into YouTube and picking stock picks and thinking that that's going to work. You'll fail. You'll freaking fail. It's not that easy. It really, really is a mental conditioning, and it's an evolved art. I just saw Bill here. As I scrolled down, Bill, those popped in there. So Bill is also a channel creator as well. I called out the rest of the folks at the top of the live stream, and I just want to call you out individually as well. So welcome, and thank you for taking your time to pop in here. Very cool stuff. If there's folks in here that catch this, Bill is one of the 4 channel creators that have popped into the group here. Certainly you can kick over and support him and his efforts as well to build his platform up. So welcome to you, and thanks for kicking in here. I'm going to scroll back up here a little bit and try to scroll through here and see if I can't earmark some of these good questions here. King Hughes is replying to somebody else. I think they have a lot of iShare funds available, commission free. Awesome. Yeah, so you guys can get in here, and I kind of got beat up a little bit by going on my rants a little bit and not focusing on the questions, but you know, to each his own. I think you guys enjoy talking to each other as well, and I do have a lot of help that come in here as well. TD videos are very helpful. That's cool to know. It just goes along with my pulse of ensuring that you guys are getting into your platforms and learning that platform. It's going to help you a ton. The allocation question, it's on your platform. Dividend reinvestment settings, you got to know how to do it. It's very, very simple. But each platform has its own little differences there. So just make sure that you guys are getting familiar with that. Oh man, it was 1979 wood that tipped, man. Good stuff. Thank you for that. I really appreciate it. I can pay the light bill. That's cool. I appreciate it. Cruise up here. It's hard for a smaller fish. Interesting. King Hughes is it. I want to get the original of that question. That's pretty cool. I could comment like that on every day. I kind of put that in the Facebook group, and that's a lot of reason why we're doing what we're doing. Is I'm mad for small people like me, small regular people, hardworking people who seemingly are disadvantaged with their mortgages and disadvantages with their investing accounts. Both of those, the banking institutions and the financial institutions have found their way to put their meat hooks in on both of those programs. And those are two of the most important wealth building, wealth creating avenues that a small person, okay, I'm not offending anybody, all right? Let's just say that I'm the small person here and you all are big people, okay? I'm not trying to offend anybody, but we're working class people. And I'm talking working class, baby, all the way up to 200 grand, okay? Small people, all right? People who are looking to build wealth, all right, in conjunction with hard work and a job, okay? And those are the people that I really, really advocate for, and that's really interesting. I think Bill is helping. I think this thread started a ways up here. Here it is, King Hughes. When is a purchase too small to justify a $5 commission? For example, you wouldn't buy $100 worth of stock and pay a $5 commission. Where's the threshold we can justify incurring commission? So I'm really killer. You asked that. I know Bill has probably answered the question the same way that I will. And this is freaking why you come into a group like this, is to ask these questions. But man, brother, those solutions that we offer, those buckets through M1, number one, you need to check out M1, okay? If you're going to ask a question like this, pull out a pad and a paper and prove to me that you're willing to accept the answer that I'm going to give you, okay? M1 Finance, first trade you can look at. I'm established with the affiliate program through them. They're a little bit more of a traditional style broker, whereas M1 is a little bit more aesthetically, they go with the pie, okay, basically. So it's the same exposure to the stock market. The beauty in those two products, and a lot of people don't even know that they exist, that's why you're asking, is that they offer free trades, okay? You don't have to worry about that anymore. And I used to answer that question differently throughout the course of the channel. And I think Bill, having just started his YouTube channel as well, I want him to be able to project this awesome information to his audience as well, in that you don't have to settle for that type of letting your cash build up. If you have $100, right, that you're DCAing to the account, and you're letting that build up to, let's say, 500 to make your block buy of, let's say, VOO, for example, okay, you want to buy 2 shares of VOO, 500, you let it build up for a couple months to enter into those 2 shares, because that now it'll only be subjected to the $7 entry fee. That's the way we used to answer that question. You don't have to do that anymore. You can accumulate those shares, accumulate the shares in those accounts by adding as much or as little as you want to them. It's really awesome. Now, M1 is the only platform that I've heard of that offer partial shares. And if you guys have done some research out there and found other options that allow for that type of purchasing of, let's say, larger priced stocks like Google or Amazon, just to name a few, okay, Booking Holdings is another great name that's almost, it appears as if to buy one stock of it, it's actually away from the home gamer, basically. But with M1, it allows you to gain exposure to a Booking Holding or an Amazon or a Google, whatever it is that you choose, in $100 increments. It'll cost you nothing to do so. It's a beautiful thing. So I'm quite certain that Bill, I'm going to scroll through here. I'm quite certain that Bill answered the question in that manner, but trading fees is a thing of the past, baby. It just is. Now, if you want to go with a higher tier broker, I don't mean higher tier, but I kind of do, because you're probably not going to get the level of customer service with a first trade. I know there's been a few people that have hit back and said they're satisfied with M1. I had my doubts, okay? I'm just giving you my honest freaking opinion, guys, because I'm used to Merrill Edge, and they're professional, they're legit. So is TD, so is Schwab. They've been around for a while, they're established, and you're going to pay for that level of service. There's going to be incentive thresholds that you have to meet to get those free trades in there. But beginning investors, man, You do not have to. You do not have to put up with trading fees anymore. It's a thing of the past, baby. It's a thing of the past. So you can acquire your ETFs or your single stock in whatever increments that you want. So really, really cool. Did you take me as a so Joe, I don't have a referral with M1. I may consider starting that actually, because I've had so much positive feedback on people using the M1 platform. Not only that, but I won't be lynched for that decision. So I may end up doing that. I don't know. Maybe it was premature to move away from M1. I don't know. But I just don't think I was taking advantage of the platform the way that it was intended to be taken advantage of. And that's through more of a passive program. Very, very important to kind of align what it is that you want out of the platform with what it's capable of doing. Okay. And M1 wasn't capable of keeping up with me, in my opinion. Okay. The one buy per day drove me up the freaking wall. Okay, that's just my honest opinion. But if I stacked a good portfolio in M1, even took some long positions in some single stock and took a passive approach to it like I do in my other account, it would be great. But I don't need to double up my efforts. Some people are looking at these as their primary options. And so for people that are looking at an M1 as their primary self-directed Roth IRA option, the only drawback I think to that is 500, and I don't really consider that a drawback at all. I don't. If you're serious about investing, you got to get to 500, guys. You have to. Okay, I'm not one of those guys that are going to come on here and say $100 is going to cut it. This is the big leagues. You're not going to be able to put 500 in there and not contribute to it and expect that it's not going to grow over time. Okay. All of those tools you have to take into consideration. If you start the balance, do 100 a month, awesome. I'm all about that. That'll get you into the M1 account, which I believe does have the $500 minimum in the retirement account. You guys can cross-check me if you'd like there. But King Hughes, thank you for that question. I'm sure you got double the answer there. I just haven't scrolled down to validate. So really good stuff. With expected recession, what defensive stocks are you looking at in 2019? Baba here. Well, I can pull out my crystal ball here and I'll let you know exactly when the recession is going to happen. No, I don't know if there's going to be a recession in 2019. I don't know if there's going to be a recession in 2020. What I do know is that we are on a 10-year bull market, and it may be fair to say that there's a potential that we are in the late cycle of this economic cycle. See the difference in that answer? One is responsible and careful. The other one's stupid. That's just the difference in my approach, man. And if you can benefit at all from that and say, oh, okay, I don't know if there's going to be a recession, but what are some defensive names, right, that you're looking at for your question? I like industrials, okay? I like Lockheed Martin right here. There's a few, AT&T, Walmart looks good here. Home Depot looks very good. Costco looks very, very good. Pfizer looks phenomenal. Already mentioned it here. I'd stay away from some of the higher growth. Cisco, Oracle, and the technology. Take advantage of some of your sector spider ETFs, which are they're not subject to single stock risk. Okay. Every single one of the stocks that I just mentioned, Caterpillar is reporting next week. You know, I don't even want to say General Electric, but I'm interested to see when they report next Thursday. General Electric is reporting with Amazon. I'm a proud stockholder in both of those companies, so we'll see what happens on Thursday. It might be a brutal day. It might be a home run day. I don't know. We'll see. But defensive stocks, financials. Why not? Why not financials in a rising rate environment? Why does it have to be stock? Have you considered looking into maybe potentially starting a fixed equity? And I don't know how old you are. I don't know what your risk tolerance is. I don't know how much capital you're working with. I don't know if you're looking to protect some wealth. That's kind of the perspective that I'm coming with as well. So kind of an interesting question, and I'm trying to answer it twofold to really kind of provoke thought and to ask those rhetorical questions to get you to think of, well, wow, wow, I didn't come onto the live stream and get my answer from Ryan. He didn't say when the recession was going to hit. Man, now I'm disappointed. I'm going to unsubscribe. No, I'm just kidding. I seemingly get those answers from every other YouTuber that I choose. They know exactly when the time is. They know exactly when it's going to happen. And they're always wrong, but they sure are definitive about their answers, I'd rather just come out and tell you that I don't know, because nobody does. And that's the truth. That's the truth. I think the trick is to invest as if you're prepared for the stock market to continue to rise, whatever that means. I don't know how much more appreciation we can get out of this. I contend that I think we're still in a downtrend according to the charts. There was some real technical damage done in the S&P 500 over the last 3 months. So now those have become resistance to the stock market. That's just what I see. We may just break through it, but typically it doesn't really work that way. And there's reason to be acknowledged, not to be concerned or to render emotion to what you see, but to just acknowledge what you see and be objective. Don't be definitive. I've done videos on this. One of my favorite, all my favorite videos are the ones that nobody watches. It's really funny. But I talked about this very topic. Don't talk in definitives in the stock market. People do it all the time. Now's the perfect time to buy this stock. No, it's not. You don't know that. You don't. When's the recession hitting? I don't know. You don't know. Should I be a passive or active investor? I don't know. Do it both. There's not a right answer. Ryan, should I be a dividend investor, or should I be a value investor or a growth investor? I don't know. Do both. Don't limit your capability. My idea of approaching the stock market carefully is to approach it from all angles. Attack it, and that's probably going to give you the best chance of succeeding. Diversify the portfolio, dollar cost average the portfolio, dividend reinvest the portfolio. Look at the potential of, as you age, getting some fixed income into your portfolio, reduce fees at all cost. All these things are things that nobody really talks about as often as they need to be talked about. Diversify in the portfolio. Stay long and passive on your portfolio. Align your risk tolerance with the amount of exposure that you are seeking out in the stock market. This is why you tune into the Independent Investor channel, because if I spoke that too fast, go back, rewind it, and play those 8 things again. If you can get those things, you'll be powerful in the stock market. You can continue to tune in. I've got one of the folks that said they had a hard week this week, so they're chilling back on the couch watching the live stream tonight. And all the power to you. But hopefully you guys are hearing some of this value, that's coming through. Very, very important. You're going to find that if we do enter into a recession, those are going to be the times to say, wow, it sucks. I invested maybe at the wrong time, but I invested with a defensive mind. And I took that into consideration before I invested. That's the calculative way that you got to look at entering the stock market. It's a hell of a question, man. Really appreciate you kicking in here. Baba here. That's what I call my grandma in Czech. Baba. Good stuff. Wow. Bill says, I bought PCG last week. Oh my gosh. Wow. Nothing like taking a, that's crazy, man. That you might have beat, Bill might have beat Doug for the stock pick of the week right there, man. I don't know, Doug, you might have to surrender your crown to Bill with the PCG buy. Well, I would have never done that. I would have never bought Sears either, but I don't know. You guys have just got that investing mindset. I like it. Cruise up here and make sure I'm hitting some of these. Jersey Boy hit some good questions here. Year 2019, I will do a backdoor IRA conversion, do the salary increase, smart move. How does early withdrawal work if I need to take money out from the Roth account in the future, since it will have direct contribution? Don't do that. Don't do that. I'd consider doing everything that you can do to backdoor those into the Roth and continue to allow them to work. Now, I don't know how old you are, but the solution to that is just to save raw cash on the side. Just be careful with that. And that would be a question that I would hit the tax accountant as well. I know Ernest is probably listening intently to my answer as well. He always keeps a good eye on me with that, because we have a ton of people in the community that are researching that, and they're benefiting from that backdoor option. And I don't speak as if it's like something that's not legal. It's legit. And I'm not sure if like people don't want people to talk about it that are high income earners, or that are under the 130 cap, or making good income and then dip below, or they're always above that 130 cap and they've always contributed to a traditional IRA and want to convert that to a Roth IRA to keep it going and not be subject to minimum required distributions later on in life. But that's a question that I would certainly address. I know I want to answer it, but I can't do that. I just want to make sure that you get the correct answer for your question, but I would highly consider not doing that if you can avoid it at all costs. So on a Roth IRA, you have to report to the IRS. When you say report to the IRS, basically I just declare what went in there, and it gives me 0 credit for the contributions. So whatever that means, if it shows up on the forms, I believe that does need to be reported, because it asks me. That's one of the line items. Did you contribute? What type of IRA was it? Roth IRA. And it basically zeroes out and says $6,000. 0 is eligible for tax deduction, and then I move on. So that's the reporting that I assume is required. I'm not a tax accountant. It's one of my least favorite topics. So let me cruise down here and see if I can get to the end of these questions here, man. Some really good stuff. Nice to pocket some extra money. That is correct. There were some really good trades going on. I may try to end this live stream at about minute 30 if I can. But I do want to make sure and get to I always say that every week, and then I end up going 2 hours anyway. So for you guys that are getting the playback, please bear with me, but I just enjoy it so much. I'm sorry. Second, I haven't put money in Kronos yet, but I've been watching it. Yeah, it's up 60%. If not, just be kind of careful with that, man. Don't get too crazy. You're not going to get rich overnight investing in marijuana. So just be careful. Hector Mendoza, happy Friday, everyone. Hope everyone is having a great day. Yeah, I'm decompressing, talking to a bunch of kind folks about investing, man. Again, thank you everybody for making their way into the group this evening. Your time is as precious as mine. And I thank everybody for supporting the channel, supporting the message. And hopefully you're getting a hell of a lot of benefit from it. I just appreciate everybody's time. The M1, that's an interesting idea. I don't know. I'm kind of off the affiliate thing. I'm still kind of scarred from that whole thing. M1 probably would be the leading candidate because they do offer everything that I want, but it's hard for me to back a product that I've moved away from for reasons that I can articulate. I just, again, don't think that I used it in the correct manner. So I just don't see a reason to pay a commission in this day and age. Well said, man. That's Bill Schultz's comment right above Lydia's. I agree. It's investing in a new era. That was one of the videos that I released this week, really kind of trying to point that out. And for new investors, I don't know if you can really appreciate the level of access to the stock market. I don't know how old King Hughes is. I'm not sure. If you're in your 40s like me, or if you're 16, I don't know. But all I know people buy is their icon. It's kind of funny, but yeah, man, I would just to have these opportunities when I was younger, I don't regret a thing. I really don't, because what I've learned in the stock market has been, out of hard knocks a little bit. I've been in the trenches, and that's a lot of reason why I can sit on YouTube and sit across from people and look into their eye and gain some credibility, because I've been there, done that in the stock market, no doubt about it. Lots of experience. But the cost to entry is just so low. If nothing else, the cost of an ETF, it's just extremely low right now. Less than a tenth, 0.10 of expense for a spider ETF. Some of your broader market ETFs like the VOO is 0.04. And some of the ETFs now that are available, they're moving to zero. They really are no cost ETFs, like some of the offerings on First Trade as well. There's no cost ETFs there as well. So very exciting time to be an investor. And I just call it the new era. So if you guys are hearing that little tidbit of information that I'm throwing out there, it should really get your attention. Don't pass up on the opportunity. Jesus Christ, it just take a little bit of effort to start the account. Start it with $20 freaking dollars, it'll change your mindset, and you'll be so proud of yourself that you've taken the initiative to start. And if you've taken that initiative from the Independent Investor channel or any other of the fine channels that are in here, so be it. So be it. I'm not going to apologize for getting someone started. Sneezy. Sneezy was my favorite of the Seven Dwarfs. Anyway, but to get excited about the stock market and get turned on where you wouldn't have otherwise found the options or the low cost or no cost to entry, man, that's all worthwhile. That's all the value that we're looking to turn back. So very, very important. So, but at the same time, you do get what you pay for. I pay a $5 commission, but if I need service at 3 a.m. So I knew you guys had a back and forth on trying to get your question answered. That's legit. You do get what you pay for, but don't underestimate the importance of free access to the stock market in a retirement account. Both of those fine options do offer a retirement account. That's big. That's big. It's nothing to take for granted. If it's not for you, so be it. It's not for you. But at least acknowledge no minimum in First Trade, retirement account, free trades. M1, partial shares, more of a passive program, ETFs, access to the stock market, free of trade, free of charge, 500 minimum in the retirement. That's legit. That's legit. Find me another product on the account and we'll start recommending that, because this community is nothing short of just sharing information that we have. And it's amazing when you have 11,000 feelers out there, how up to speed on things we are. The major brokerages that you're talking to at 3 a.m., they don't even know that these brokers exist, honestly. They're like, who? I've never even heard of these people. They're so locked into their program that they're naive, and they're going to run themselves into the ground eventually if they're not careful. Because these smaller brokers, man, they're making some noise. They really are. And even Robinhood and Webull, they're making noise because new customers to the stock market do not see the point in paying $5 to $7 to enter into a stock when they can do it for free. They cannot conceptualize the value on the service side of the house, as opposed to just, I can do it all myself, to screw all that other stuff. I can enter the stock market free of charge. Sign me up, I'm in. Tell me I'm wrong, man, for the millennials out there. That's just how it is. Instant gratification, free of charge, I'm in. Boom, done. Yeah. I wish they can approve upon their mobile applications. That would help a little bit too, because I think both of those platforms really could probably use some improvement. I know some of the folks really actually like the Robinhood app, which would be interesting if they could start offering retirement accounts. That might be a little bit of a game changer there. Not sure why they haven't done it already. Ryan, let's say the market collapses. That's pretty violent. I know how you think. Where would you suggest putting your money? A gold stack, cash, mutual funds? So mutual funds are kind of a thing of the past. I would kind of scratch that from the list. As far as holding hard cash, I think that carries with it some safeguarding responsibility, which a lot of people don't consider. I like the idea of junk silver, okay, because it's a hard currency that doesn't take up as much room. Okay. I of course love the idea of gold, but I think you need to start doing that stuff now. You know, if we enter into a recession, it's going to be too late. I think a prudent investor doesn't always need to use the word investor. Use the word collector or builder. Very, very important to kind of think of your net worth in that regard. Don't ever get so heavily tethered to the market that you can't benefit from your primary asset class going down. It's hard for me to say that because I'm pretty heavily tethered, because I'm not a doomsday prepper. I'm not. Okay. I'm going to live once. Okay. I'm very, very crystal clear on this. Okay. Some of you guys, if you do end up living forever, I grant you all the success in the world in doing so. But I think you should prepare to do that now. I think I'm not a big fan of gold stocks. I'm not a big fan of mining stocks. There's a difference between a Rand Gold and a miner. Okay. I certainly, with the cost of extracting the ore from the ground, gold stocks, the miners, is not something that I would recommend. Now, a company like Rand Gold, where you don't actually have to, you own the physical gold, but you don't have to safeguard it. They own it for you. Kind of an interesting option. I will tell you and disclose, I've never done that before. I would be more interested in owning denominations of the hard currency myself. That's just my interest, because I'm kind of a dork. I get a sense of gratitude from the collectible aspect of it. But I don't know. I've never lived through a total collapse of the stock market, you know. Are we in for a total collapse of the stock market? I don't know. I'll answer your question, Joe, the same way I answered the other one. But you strike up a conversation that I don't shy away from. Okay. I don't know if there's enough discussion on the defensive side of the house, as opposed to just the stock market's like Disneyland. It's freaking great. Get involved and invest and you'll become a millionaire. You know, that type of BS really, it really kind of gets me going. It really misleads people because it doesn't give people the full picture. Okay. I'm not going to deny historically the benefits that the stock market has turned out. Okay. That's what we have as an indicator, is historical returns. What does that mean for the future? I don't know, guys. You've all read the disclosures. You all know what it means. So just want to be very, very careful about that. That's a killer question, man. It strikes up a lot of thought. And I know you're a thinker, and I know you're a follower of the topic. And I tend to listen to guys like you because I'm not an expert on that topic. But I would consider folks, and I've done videos on, you know, the vendors out there that offer the commodity, for example. You know, you can own silver in a multitude of different ways, different denominations, junk silver, bars, even collectible coins, etc., things like that. Same thing with gold, which is extremely expensive in my opinion. But I think it's a good idea to think about acquiring a lot of it. And that's just my opinion. It's a great question. Thank you, Joe. I appreciate it. Minute 30, I'm going to continue to go and hit some of these questions here. I've got John who hits me up with another question. That was what I'm seeing, as well as lots of value. Currently, I have about 26 stocks of dividend growth investments. I'm thinking about broadening the portfolio. Good grief. I'd kind of like to know how much that's spread across 26 stocks. Make sure you're not spread too thin. I do like the idea of kind of spreading the portfolio a bit, as long as those 26 stocks aren't all single shares of those respective stocks. Okay, I've seen this mistake where people hit me up with their portfolio and they've got, you know, $2,000 and they've got 48 names in the stock, and you got to be kind of careful with that a little bit. And you're not watering down the portfolio at all. I'll have you guys know I've got about that same amount, but I've got it spread over 100 and a half. So just to kind of give you some perspective, you know, take a good bite out of a stock if you're going to take a position in it. 5, 10 shares is a good starting position. Again, to accumulate up to that, especially on some of the buckets that we offer through the independent investor channel, certainly you could step up to those 5, 10 share positions, not have to buy them all at the same time. You could scale in, buy 1 share, it goes down, you buy more, it goes down, etc. Buy 2, right? You can kind of step into the shares that way. So, and that's an extreme example, but you get my drift, I'm sure. Cool. Just as long as you are getting what you feel your money's worth, it's all good. And that's exactly right. Having that benefit just isn't worth the amount. I would end up paying commissions for me personally. Yeah, and I would add to Bill's comment there, especially over time is really where where it really bites you, and it's not quite as evident either over time when you're subjecting your money to those fees. So important to keep in mind, but in the other side of the coin as well. And I've had some feedback too for some folks that really do see that value and in the services provided as well. So 2 schools of thought, certainly. And I would just as soon revolve on both sides of the spectrum. I don't want to shy away from talking about the lowest cost alternatives out there, what type of service you get. I'm at an incentive threshold in Merrill Edge, so there is no cost. So I get the good customer service, in my opinion, for the low cost of entry, and that starts at 50 grand. Vanguard starts at 500 grand. So I want to be open with that dialogue, so somebody who's looking for their first account can really benefit from that. I appreciate that conversation going on in the group here. Very good stuff. Joseph says fun. Yeah, it's fun. It's a fun topic. Let me cruise on down here and see if I can't get to the bottom here. I've got Greg, man. Greg, Cammie, I want to single you out a little bit. Certainly, I sure do appreciate your well thought through comments. Holy smokes! I've got some folks that come into the community and they just, if you can teach about any given topic, the teacher is never immune to learning, and I'm not one of them. I learn so much from people. There's folks in this group, especially the Facebook group, that are 10 times smarter than me. It's just that my tools are put together pretty well, and I've been able to utilize those tools to formulate some wealth. And I want the best for you guys too. That there are going to be community members that pop in the independent investor channel that are going to become way more successful investors than me. Why? Because I'm giving you the tools, right? We only have so much finite time on the earth. Time is the ace in the hole when it comes to investing. Okay, for a lot of folks, that are in their 50s, 60s, 70s, they enjoy the message just as much as the 20-year-olds as well. But they may be in a completely different scenario as to why they're seeking out a self-directed option as opposed to a 20-year-old. Now, the difference is the 50, 60, 70-year-olds that tune into the channel, they get it. The 20-year-olds, I've got 5 minutes to win those kids over, and then they're done. They're like, this guy's boring. He sucks. That's fine. You'll learn eventually, man. I do have a good handful of folks that are really, really smart, and they're in their 20s, and they come on, and they're like, wow, I can't sleep. This is crazy. I never thought this existed. So for those kids out there that are finding it, that's awesome. But Greg, thank you for your comments in the group are just really appreciated. And it's welcome you to the live chat. It's really good to have you on here. Oh, that's right. You were on vacation since the shutdown. Did you have to go in any way? I don't know, man. Was I on vacation? All right, let me break it down to you. I was definitely not on vacation. If somebody was in the group, or if you're talking to me, your good host of the Independent Investor Channel was working for free for the man. All right, it's not the first time I've done that. Okay, so I've got Gwendolyn in the group here. Sunrise, I made it. Better late than never. It's so good to see you. Very cool to have you in the group. Very thankful for our discussion. I hope it benefited you and helped you on your way. Good stuff. I'm humbled. I'm honored. Thank you. And thanks for popping into the group and saying hello. Where's Greg at? Everybody's saying hi, Greg. Hi, Greg. Hi, Greg. Everybody. Oh, Greg. Oh, hey, we're a nice group here, Greg. Certainly. I thought it was another Greg you guys were talking to. Yeah, so I'm pretty welcomed group, man. So I'm going to start to attempt to earmark minute 45 to kind of slow down the diesel engine as well. And we'll look to sign off here in about 15 more minutes. I'd like to get to some of these other questions. At the bottom here, TD Ameritrade gets brought up all the time as one of the premier brokers. Greg says M1 is share builder on steroids. Awesome. I use both M1 and First Trade. Yeah, good stuff. I think you can get the best of both worlds. Unfortunately, it's going to benefit you having one Roth and one taxable account. So whichever you choose to use in that capacity, make sure that it benefits you in how you're strategizing those two accounts, especially in what you want. If you want to be both an active and a passive investor, okay, make sure that you're aligning the very best of M1 and aligning the very best of First Trade. If you're going to be trading a little bit more, First Trade might be a little bit better option. Well, I know it's going to be a better option for you guys. Let's just be frank. And the M1 is going to be, excuse me, one of those options that you're going to want to put that away and just let it ride, whether it be you invest in ETFs or single stock option as well. So good stuff. I'm on Fidelity South. Good stuff. I've been using TD for a long time. Doug Whitaker. Awesome. Yeah, there's been a lot of people who've come through the channel who've really, really supported TD. So they must be doing a great, great job. TD, great support during transition from Scott Trade. Scott Trade was old school. That's where I started my penny stock trading career, failed miserably, fell on my face, lost $3,000. So for you guys that have tuned in for minute 36, you're getting to hear one of my biggest blunders. I've had lots of good blunders in the stock market. It's been fun. I thought I was going to be a penny stock investor and I lost. I didn't succeed. So and I've made that back tenfold since then. So you live and learn from your mistakes is the idea there. Nice. I'm currently transferring my account from Robinhood right now. South-based kid, smart, probably a good idea. I think you could probably get a little bit more optimal product and into some of those other offerings as well. So good stuff. Christopher Blaine, TD Ameritrade has lots of investor training videos, classes you can take online. That's awesome. That must be the Think or Swim that you're referring to. That's really cool. Roth IRAs with Vanguard all the way. Smart. They're major, reputable brokerage house. They're going to do fine. They're going to get you that action, which at times solves my small fish problem. Oh man, come on. I think the Independent Investor channel does a pretty good job of trying to take those small fish and point them in the right direction, no doubt. And I don't judge people by the size of their wallet. Okay, pisses me off, that criteria. I've met a lot of folks that have a lot of money, and you'd never know it just because they're great people. Conversely, I've met a lot of people that are wealthy, and I don't really want to have anything to do with them ever again. I've met a lot of salt of the earth, hungry people. That's the great thing about the stock market is it's the great equalizer. You can want to do it, and you can have a desire to do it, and you can succeed at it. All right. It's not good enough to have money and think because you have money, you're going to automatically succeed in the stock market. It's the great equalizer. That's what I love about it. I love it because I've met people with money and they don't know the first freaking thing about the stock market. It's not their fault. The problem is a lot of those folks are the hardest to get through because who am I to sit across from somebody with, $1 million, $1.5 million, $5 million, $10 million and tell them that they're doing it wrong? Who am I? I'm just a nobody, right? What allows me the criteria to sit across from somebody is if I have an equally as big or bigger portfolio than them, right? It has nothing to do with the knowledge. I beg to differ. The great equalizer. That's the beautiful thing about the stock market. Good stuff. I sent you I sent TD an email and got my commission lowered from $6.95 to $4.95. That's pretty cool, man. That's really cool to offer that into the group there. I think there's latitude for a lot of that. And you're not the first one that has said that. If you're willing to push the issue a little bit, you may end up getting those commissions lowered a little bit so they keep your business in-house. Excuse me. So let me cruise on down here. Man, TD Ameritrade's getting a ton of love. Yeah, FinViz, that's it. Thank you, Lydia. Again, I'm 41. When I was young like you, I could remember all this stuff, but again, it's the more I jam in here, the more comes out the other side. So that's just the way of it. Colin discussed other platforms. Investing has been an amazing hobby, and you have been a big help in learning process along the way. Sam, thank you. I really appreciate that. I'm not one of those people that I can't talk down to people. I've got to talk to people. There's a ton of people hitting up the channel from all over the world. Okay, a lot of people, and man, everybody's got something to offer. I'm learning that. It's just really, really cool for me to really align. A lot of people have perspective that are more aggressive than mine, more advanced, maybe a little more conservative, maybe. And it's really cool to kind of match up those tools that people have with the solutions and say, no, I think this is really good here. I think you've got a very good thing, but have you thought about this over here? And it's like, whoa, hold on a second. That's just a mind blow. I had the capacity to hear that out. Thank you. You know, I really appreciate a comment like that, man. It's very cool. Motivates me to keep going on the channel, to be honest with you, because that's kind of the natural energy that I get from the channel, are those positive motivations. I don't like a lot of a negative on the channel. I don't like it. So best fun you'll ever have with your will have with your close on the stock market. I'll leave that alone. Andrew's having a few drinks tonight. That's awesome. He's probably working actually. So Mike O, spell check changed fin is to concise. Also, if you set up your tax papers to be delivered electronically, that's the key. Is to set that up. You want to have all those documents imported into your tax software. I might not have been as clear as I needed to be on that, but Michael Raver makes a great point there. You want to make sure that those papers are automatically uploaded into your tax software from your brokerage. There's going to have to be an address set up, that type of thing, and it has to recognize your broker. It takes a little finagling to get them to recognize, but it's very, very important that you do just that. Don't try to manually input that. It's not going to work for you. Finagle with it until you figure it out. If you can't, call the help desk and have them work through that with you. Very, very important. These funds look like they just started a couple months ago. King Hughes, I'm not sure what you're talking about there with the funds starting a couple months ago. I'm not really sure if it's funds or accounts. I'm not really sure. M1 is fairly new. First trade is 30 years old. So hunger's the key. Desire, fantastic. I agree. Good stuff. And I'm almost timing this perfectly to where I get to the end of this. Love doing my homework on companies. Yeah, Doug, I give you all the credit in the world, because I can tell you do your homework more than me, honestly. I do what I can when I can, but I'm at 125 on my book, and I'm looking to get that finished. That's going to be a fun project for everybody to take a round turn on. If reading is your thing, it's not my thing, and I'm not an author either, which is kind of funny. But I'm writing a book that should go big. It'll be fun. It'll be a lot of fun. You sound like a lawyer, Lydia. She is. That's why yeah, she's working to be one of them big attorneys there in Los Angeles. Good stuff, man. I love it. Love seeing success in people. Good stuff. She's coming back. I do work at a law firm. That's funny. Let me cruise down here. I want to make sure there's no other questions here. I appreciate the tip. Yeah. Hey, King Hughes, thanks for coming in, man. Hopefully that helped you on your question there. A few other companies. I have had interest in. I've been looking at J&J, PG, Royal Dutch, the B shares, Altria, Boeing, JP Morgan, 3M. What's everyone take on these? Have 3M factory in my town, so that one is a little more close to home. I like all those names, all of them. They're all good. Yep, they're all good. There's a lot of good stock pickers values right now. I find the live streams relaxing. I just leave my whiteboard alone. I just can't leave my whiteboard alone. Nice. I'm glad you guys get value out of it. Honestly, I'm kind of self-conscious. I want to make sure that your guys' time is well spent. I typically go for 150 every single Friday. That's fine. That's a good time. I don't want people coming in here for a few minutes. That's just silly. The investing topic demands a little bit more interaction, and I also want to make sure that everybody who comes in has a little bit of time. I've got CY in the group. Very cool. Great to see you. Sorry for the shout out. I'm getting to the end of my questions here. There was a pretty robust group in here tonight. We did not make our 100, but that's all right. I will take a loyal person over 1,000 unloyal people in a second. And you guys are all awesome. I just love you to death. Thank you so much. I really appreciate it. But CY, nice to see you in the group here. To get to the end here, make sure there's no other investing questions that I can address directly, because that's what I'm here for and that's what I like. Joseph says, thanks, Ryan. I feel the same way. You the man? No, you the man. Absolutely. Appreciate it. Mandingo, I never lose trading natural gas. Just my way of making easy money, actually boring trading it. It's interesting. I'd like to hear some stock picks. Royal Dutch Shell and Marathon Petroleum have not done quite as good as I'm looking at. The shale industry for oil is not helping my major positions at all in ExxonMobil and Chevron. Hopefully that shakes out as well, but we'll see what happens. New follower from Montreal. Awesome. That's great to have you. Congratulations on being one of the top 5 places to live in the world. That's really cool. I just had a bunch of questions dump in here again. That's all right. I'm going to cruise down. M1 Finance, Mr. Finance Guru, definitely. I was disappointed in myself for starting at 40. Don't be, 40's young. There's no reason to beat yourself up over that for sure. I would just be more disappointed in the condition of the market starting at 40, depending on how long you've been investing. If you started at 40 and now you're 65, then you're probably fine. But starting right now does require some level of defensive posturing in the market. Don't get too crazy unless you're a new investor, unless you're my happy couple there that just popped into the bottom here. I just am now seeing you. You guys are sitting on the couch together enjoying being married. That's very cool. I'll buy your book. I will sign my book for you, and I will also write you guys a kind bit of words, because I don't speak too much about my personal relationship, but that's my other half. No doubt it means the world to me. It's a lot of reason why I do projects like these. And it's absolutely, we have a great time raising our 2 children. It's the very thing that makes me happy. That's the very thing. And I just wish the world to you guys, the best to you guys. And certainly I'll make sure and finish that project out for everybody else that's interested. But it's great to see you guys in here. So let me see here. Just have my sidebar pop in here. Do you think I should pay all debt, Ryan, before putting more money in the market? It's relative, Lydia. Geez, you came out with the question in the night at minute 48. And since it's you, I'm going to spend some time answering it. It's a very important question. Here's my answer to you. You're young, so you have a good job. You have a solid portfolio. The stock market is not in a condition where you need to be shifted into 6th gear. Okay, now is the time where you can kind of let some of your investments ride and do their job while you potentially focus on some of that debt. Because here's the thing, and correct me if I'm wrong, I'm pretty good at listening to people. You wouldn't have posed the question to me if you weren't interested in at least acknowledging how important it is to pay that off. Now, depending on how much it is, or if you've racked that up a little bit in pursuance of your career, right? You're investing in yourself, etc. right? It's all good stuff. But I don't think this stock market is one of those that you just need to be aggressively pursuing right now. I don't. I think you could downshift and be just fine with that. You've got a great portfolio working for you. You seemingly, patience is the key in the stock market. And I'm going to be honest with you, I don't have a lot of patience myself. Like, I want success yesterday. So, but it doesn't mean that's not what it takes. It does take some patience. And right now, I really wouldn't beat yourself up on just trying to put every last dollar that you have into the stock market because of the condition of the market. If we were at a bear market and you asked me the same question, I'd say, Lydia, go big, go with everything that you have. And you'd look at me and say, you're crazy, Ryan. How can you say that? The stock market's going to zero, But again, remember the Buffett philosophy. You have to remember those tried and true rules. Very, very important. They're all solid, So very important stuff. But thank you for asking that question and trusting me with an answer. That's the best answer I can give you out of that. It's really good stuff. Listen, guys, I'm at the end of my comments. I do want to wrap it up. It has been an absolutely, my eyes are closing. I'm so tired. But it's been a pretty crazy week this week. Certainly gear up. Next week is really kind of what we're an investor for. We'll see what happens, what shakes. I'm not quite as optimistic as everybody seemingly is going into earnings. I think we'll probably end up next Friday and have a lot to talk about with how things shook out. I think $1 billion in Bitcoin buy on your channel. Also gold and silver proof of purchase. I love it, man. Thank you. Really appreciate all the support here. Good stuff. It's just my truck debt. Oh, good grief. You're fine. Stop. You got to have that Tacoma to beef around Southern California, man. I know how important that is. No, truck debt is secured debt, so you're good. Unsecured debt would be something like a credit card. You're totally good. Just hold on to that. That's not hurting you. And I would imagine that you probably have a pretty agreeable interest rate there too. So don't even sweat that. You're being too hard on yourself, no doubt about it. But guys, with that, I will sign off. You guys have the rest of a great weekend. And I will try to keep the uploads during the week coming, just to kind of keep things recharged in between the live streams on Friday. But this is really going to be kind of my backbone over the next 3 or 4 months on the channel, because I'm going to retract a little bit from doing the weekly uploads. I just don't have the time to do it. That's fine. Go back, review some of my older content. I know there's a lot of new subscribers to the channel. I would encourage you to go back into some of the Chronicle, and I could really care less. Skip the ads. I don't really care, but there's a lot of good content that's been put on there when the channel seemingly had nobody watching it. And I refuse to redo. I've redone some of them, but some of that old content is really good. So guys, thank you for tuning in and had a great discussion tonight. Have a great rest of the weekend. We will catch you next Friday. Take it easy.